All right, everything should be good. Hello, everyone. Hope you guys are having a pleasant weekend and a happy Father's Day. And so, in light of that, I'm going to go ahead and get right into what I'm looking at, get right down into the business for this week. We'll go ahead and keep it moving. Probably not going to take as many questions today as well, again, so we can all get back to enjoying our Sunday and taking it easy. So, with that, let's go into dollar monthly chart. Ahmed, hello, Dylan. Hope you're doing good, brother. Good to hear from you. Sal, Dylan, your voice is ever presented in house, watching your teaching, that all the family acknowledge you're one of us now. Just waiting for you to touch down in London. Sounds good, Sal. Let's make it happen in London sometime, brother, for sure. Glad to hear. Still hitting it hard, brother. Jared, good evening from Frankfurt. Nice, nice. Hear you picture fine. Thank you. Glad to hear everything's good. Appreciate the confirmation, sir. Carl, hi, Dylan. Hello, hello. Eslam, welcome back. Glad to have you. All right, guys, like I said, let's go and get right down to the business today. Again, so we can all get back to enjoying our weekend. So let's go and get right into it. Dollar monthly chart. I'm going to share, actually, before I go into it, what opportunities I'm looking for. Again, I know we have quite a few new faces in here. So I'm going to be looking at the opportunities in currencies, index futures, as well as some commodity markets if I'm seeing something in the crude. So with that, we'll go ahead and touch on that. Again, we always start with dollar. Dollar tells us where other markets are going to go. And if you recall, going right into the analysis on dollar, and it's actually interesting because as you guys know, we had bullish dollar and bullish index futures. So very interesting week. But again, we've been keeping you guys ahead of the curve, even in crazy town, which is what these markets are at right now, right? Dollar rallying, index futures rallying. We have treasury bonds rallying with the dollar while interest rates are dropping. So interesting times to be in as a trader. But again, we're keeping you guys ahead of the curve every step of the way. Chris, nice to see you again. Glad to have you, Chris. Matthew, these lives get boring because I already know what I'm looking for these days. Mentorship next level. Glad to hear, Matthew. And that's exactly the goal. Again, make you guys independent traders. And the goal is not to have you here. Not because I don't like you, but because you're confident in what it is you're doing. Love to hear that, Matthew. And again, you've been hitting it hard. So the common theme in everyone in private community mentorship that is seeing real success with everything is putting in the work, getting in the reps day to day. And I know it's rewarding to begin to see the fruits of your labor when you're putting in that work. Glad to hear that, Matthew. Keep it up, brother. All right, monthly chart for DXY. We're watching this monthly bullish order block here. We traded down into it, and then we're seeing expansion to the upside. Shared with you guys my drawn liquidity for the monthly chart is these equal highs here and here. And then through that on the upside, we have this imbalance, right? So again, nothing's changed for the past 2 to 3 weeks. My bias still remains bullish on the macro perspective. All right, weekly chart. Market traded lower. We took out those equal lows that we were targeting on the downside. And then from there, we've seen a rejection to the upside. And then again, still looking for expansion into these smooth highs here. And then these relatively equal highs here at the about 107. So again, nice rejection from the equal lows. So again, we want to see distribution to the buy side here and here going into the next couple weeks. Leo last week played out nicely. So random. Yeah, no doubt. It's almost like we're given the winning lottery numbers here, right? So weekly chart, looking at this wick here. Again, wicks are gaps. Stayed in the upper 50%, confirming strength, and we gapped higher. So those are all signatures indicating that the algorithm is bullish and is going to continue to reprice higher. So gap higher, finding support above 50% of that wick, and then see an expansion to the upside. Daily chart, market traded lower. Again, sell side here, here, and here, these relatively equal lows. Market traded down. Took your attention to the bullish breaker last week, which is again this up close candle, indicating to you guys I want to see this act as support and send us higher into the first target, which was here, second here, and then third here. And then again, all those targets were delivered to the upside. But again, take away the why we're seeing this so that you can again take this analysis and have actionable steps, know what you're looking for in your trading. So the market traded down into the sell side here and here that we took your attention to. And then once we displaced here on Friday, that confirmed to me what we're going to see, higher prices. So if sell side was traded into here in a discount of this range, smart money is buying those sell stops. So where are they going to distribute to? The buy side here, here, and here. So it's not a secret. There is no crystal ball. It's just understanding how liquidity is delivered in the market and then understanding the signatures around how these markets are delivered. So once you learn that, it takes away all the guesswork and you know what you're looking for and why you're looking for it. So bullish breaker, finding support there. Again, wicks trade outside of it, but the bodies are telling the true narrative. Traded all the way down, spiked into the bullish order block, but we stayed above 50%, which I like to see. And then we saw distribution Thursday and Friday into the buy side. And then one of the other insights I wanted to share with you guys, looking at the COT report, the commitment of traders, and the data, and again, how to read that and how that merges together with the technical side of the markets. The commitment of traders has been indicating commercials are net long, which means we want to see higher prices for a macro perspective. But remember, when we were in this price action, we were still looking for lower prices. Because again, even though the fundamentals indicate the market's bullish, that doesn't always mean the market's going up. So understanding that, when you understand how to piece all this together, this is a consolidation. That's accumulation. It's building orders. So how do we know they were going to drop it here, accumulate the sell stops, and then distribute to the buy side? Well, because the commitment of traders is indicating they're net long. So when the market's dropping into a discount, smart money traders buy sell stops. So if they're buying those sell stops, indicating that the dollar's under accumulation, because COT is indicating commercials are bullish, you can see how this was accumulation. And COT indicated that commercials were indeed adding long positions here. And then you can see how the fundamentals play out with the technicals. But again, you can't use one without the other. So seeing how that comes together, we were able to see this was accumulation real time. And then now we're seeing the distribution to the upside here, here, and here. And that's what we want to be trading, the expansion to the buy side. All right, 4-hour chart. We have this inefficiency, and then we have these last two, or really 3 up close candles here. You can extend that through. That's the bullish breaker. So I'm going to want to see how we trade inside this range and the inefficiency below market price. Would want to see a low. Would want to see a low materialize in here and not see us get below that breaker. So I'd want to see a low of the week form here if we're going to remain bullish. If we get down through the breaker, then we have this inefficiency down here as a target, but I don't think the market needs to reprice all the way down into here if we're going to remain bullish. There's equal highs here, here, and here, and I want to see them expand into that with speed and then eventually zooming out, getting up into these equal highs up here. So that is it for dollar. But yeah, before I go into the bond market, let's go and take a look at currencies. I know we have quite a few currency traders here. So looking at euro, right? If we're looking for higher prices on the dollar index, that means we're going to be looking for risk off, right? Which means lower prices on foreign currency. So you see how that sets the tone for what we're looking for in euro, pound, Australian dollar, Kiwi dollar, any of the, again, currencies you're looking at with dollar last. So if that sets the bias, right, we're looking for risk off, we're going to be looking for a lower weekly expansion. Open high, making a high of the week, and then expanding to the downside, making a run for the sell side here. So again, as long as dollar remains bullish, I'm going to be looking for lower foreign currency. All right, daily chart. SMT here at the highs, buy side here and here, those equal highs, market trades up into that. And then we see a key SMT. So we see an accumulation here, and then the market breaks down. So the reason why I didn't need to see a stop run here in the euro, I didn't need to see the market trade above this high, is because pound did. So pound did take out this high while euro was unable to, signaling an SMT. And if you guys remember, we were looking at that for the last couple weeks. So with that in mind, euro's indicating it's the weakest algorithmically because it was unable to make that higher high. So if you look at how do you know which is the best asset to short? Euro, because it failed to make a higher high when pound did. And again, you can see the effect of knowing how to trade the right asset based off reading these algorithmic signatures in the price action. And then again, nice sell off on euro. And then again, pound, not so much. Looking at euro on the 4-hour chart. Again, you can see accumulation at the highs doesn't need to make a higher high here because again, we have the SMT with pound. Then we see the market aggressively break down. That's not it. If you also recall, we took your attention to euro pound. And what have we been seeing in euro pound? Sell side delivery, right? Bearish order flow. So because euro's first in the name, it's going to be weaker over pound. So those two tools allow you to know how to trade the right currency as a Forex trader if the dollar's bullish, right? So again, that's how you take away actionable insights from what it is that we're sharing here in the Sunday streams, but also in the COT report, and then also sharing the targets in our free newsletter. Again, the sell side in a discount, and then we see distribution of the highs here, here, and here. All of our targets delivered beautifully. And then now looking for these relatively equal highs here, labeled buy side liquidity. So again, that's the power of understanding how technicals come together with, again, the fundamental analysis. And then you'll see here, euro pound delivering nicely to the downside. And then beautiful delivery on euro dollar in line with higher dollar. Now to take a look at interest rates, very interesting. Was monitoring this week. So we actually have a lack of symmetry between dollar and bonds, right? Typically, dollar trading higher should mean bonds, or the treasury, specifically bonds, should be selling off. But we have what? Treasury bonds rallying with the dollar. So again, that is indicating lower probability market conditions because there's not market symmetry. So we have bonds rallying, and then if you go to the interest rates, we have interest rates selling off, and selling off. So all that indicates is that, again, markets are lower probability because they're decoupled. So what I'm going to monitor is right now bonds are bullish and dollars bullish and index futures are bullish, right? It's like I told you guys at the beginning of the year, it's going to be a wild year. So with all those things in mind, we have to trade what the technical analysis is showing us. So just because the dollar's bullish, many were saying, well, dollar's bullish, so that means index futures have to sell off. That's not the case, right? Because we can have bullish dollar as you just saw, and we can see the Nasdaq continue ripping. So again, it's all about knowing how to read the price charts and what they're communicating to you. So going back to treasury bonds, we see a weekly expansion, this inefficiency here. We've closed above it. So as long as we remain bullish on treasury bonds, we have the buy side here, here, and here as an upside target, again, as long as the institutional order flow remains bullish on a daily chart. All right, so daily chart, we see the market retraces into a short-term discount of this range, and then we see expansion to the upside. So again, moving in the same direction with DXY, expanding into the equal highs here and here. So again, as long as the order flow remains bullish, I have to trade what the charts are telling me, not what I want to see. And as for right now, we are seeing decoupled markets as a whole. All right, that's about it for bonds. Let's go into Nasdaq. All right, Nasdaq monthly chart. We have open low, and then we made the low of the week in non-farm payroll inside of the bullish order block. And then we see nice expansion distribution to the upside. So again, it's really important to also look at the monthly chart as well, because if you understand the monthly chart and where it should go, again, that's going to make mapping out the weekly chart much more straightforward. And then obviously the daily, and that's why it's top-down analysis. So you don't want to neglect the monthly chart because it is imperative. Monthly, weekly, daily are the time frames banks are trading off. So we want to, again, be mindful of all those levels and what's occurring on those time frames. So we see an efficiency here on Nasdaq, again, supported, displacement to the upside based off what we're seeing on the monthly chart. Weekly, we are looking at this inefficiency and breaker. So some insight is when there's a breaker that overlaps with a fair value gap, that will be a highly sensitive algorithmic reference point. Of course, that's in line with the drawn liquidity where the market should be going, which is higher. And then you see, again, we've been mapping that out to you guys and also being able to see the turning points, understanding how the algorithm, again, is repricing these markets. So breaker, fair value gap, hit it, use it as support, and then the bias has been bullish for the last 2 weeks. And going into this week further, looking for higher prices. I'll show you guys how I was able to get targets this week at all-time high valuation and how I'm going to continue to get targets going forward, again, as long as index futures remain bullish. Daily chart, we have the bullish breaker and daily fair value gap. Again, the fair value gap is this range, and the breaker is the up close, the highest up close candle. Extending that through, that made our low of the week on Monday. Again, not random at all. Beautiful low of the week on a Monday, and then we see expansion higher through the remainder of the week. And again, the bias has remained bullish. We are not trying to call a top when markets are trading at all-time highs, and coupled with all the signatures that we're seeing, right? Look at all these inefficiencies left open, left open, left open. And then I don't recall if I said this here with you guys or if it was just with my private community on Discord, but I'll say it again. This gap here being left open indicates that's likely going to be a measuring gap and that we have much more range to see on the upside. So again, that's how we were able to expect this explosive price delivery, again, based off all the signatures that the market is extremely bullish. And again, that's a higher level, more advanced understanding of reading institutional order flow. But as you start to see how all these things come together and you learn how to read price action, you can start to predict these types of explosive price runs, again, based off the signatures in the market. Bullish breaker, fair value gap, again, making the low, displacement. And again, keep in mind what I said with the breaker and the daily fair value gap. Those key levels coupled together are going to be highly reactive, highly sensitive algorithmic reference points. And you can see the levels there. So that's why, again, when we take your attention to these levels, you want to have these levels on your chart because you would have the low of the week. You would know where the market's going to turn from, and again, why it's going to turn from it, just like our community does week in and week out. So looking for higher prices still, we have a bit of an inefficiency here. We can trade into that, but again, as long as we remain supported in the inefficiencies and order flow remains bullish, I'm looking for higher prices until the top is in. All right, zooming in, 4-hour chart, divergence here at the lows. ES took out the sell stops on a Tuesday, making a Tuesday low of the week when the markets are bullish, which is, again, the expectation. And we see a divergence at the lows. And let me show you that. Show you guys what I'm referring to. And then you see the SMT. When the bias is bullish, inside of a key daily PD array. Again, remember what I told you guys about banks trading off monthly, weekly, daily levels, right? So you see how influential these daily levels are on price. So again, when you're looking at these levels, if you want to know where the big explosive moves are going to happen from, where they're going to end, where they're going to begin, you want to understand, again, how these factors come together. SMT at the lows, displacement, inefficiencies left open, and again, the market remains off to the races. So we see relatively equal lows here. Can they come down for that? It's possible. Does it need to? No. So I'm going to be seeing how we trade early in the week. Again, still looking for higher prices. However, it's permissible for the market to trade down below these equal lows. But again, keep in mind it does not need to. I want to go back to the daily chart and share what I was using for targeting. So from low to high, I want to measure the intermediate term high and the intermediate term low, and then I want to run standard deviations to the upside. So my first target on this week was the -0.5, and then the best case target would have been the -1, which is the 19,800 level. So going forward, these are going to be my targets to the upside, again, as long as that order flow remains bullish. Another way to refine that even further, let's drop down into the hourly chart. And again, this is how I teach targeting at all-time high valuation, and how do you get targets when a market is in discovery mode at all-time highs. So that is anchored to the daily chart, but again, you can refine your fib projections down the time frames. So you see the space or the disparity between these targets is rather large. So again, it's great targets for a daily chart, but how about for intraday trading? You have to calibrate the fib projections to the time frame that you're analyzing. So if I want to have refined targets, I'll go to the hourly chart, and then I'm going to measure the price leg that sets up the true move. Why is this a price leg? Because this was the manipulation move that sets up the expansion and the distribution. So it's a clear-cut, systematic way of determining fib projection targeting. There is several other ways to do it as well for more confluences, but again, that's far beyond the scope of the Sunday stream. But again, showing you guys how to get targets. So on the daily chart, that's what I'm looking at. And then on the hourly chart, I'm going to use the same logic, but I'm going to refine it to the time frame I'm looking at. So that's going to be this high to this low. All those could be upside targets, but specifically the ones I'm looking at are -2, -2.5, and then there's a best case scenario, -4. And then you can see how that gives clean upside targets when we're at all-time highs. So again, the key is to calibrate it through the time frames and measure the dealing rate, or not the dealing ranges, the fib projections, and anchor them to the time frame that you're analyzing. And then that's how you can get more refined targets intraday. All right, that's it for NQ. Let's go over to E-mini S&P. Everything the same on as it was on NQ. Let me one sec. Let me get these levels off here. All right. So again, breaker, fair value gap, finding support here, and then again, markets off to the races to the upside. Daily chart. We have the daily fair value gap here, and then that's overlapped with the breaker. But taking our attention to the daily fair value gap, note the respect perfectly at the consequent encroachment of the fair value gap here, and then look at this inefficiency here, and then look at how it perfectly prices in a low right at consequent encroachment, or 50%. So you can see the precision in having these key higher time frame monthly, weekly, daily levels on your chart. And these are the levels that I'm using in my trading. And these are the levels that we make our community aware of as well. So they have all these reference points in their trading. So as they're watching intraday order flow, they're watching the markets, they're studying, they're looking to take their trades, they have these higher time frame algorithmic reference points that we're again using in our trading. And we make that available before the market even refers to those key levels. And again, you can see there's a systematic delivery in how price is delivered. Again, the low turning there when the market's been bullish, which again, we've been sharing, we have been. The low there, that turning point, this turning point, those aren't random signatures in the market. They're all algorithmic. So understanding how those signatures come together, that's what's going to give you the precision that you're looking for. SMT at the lows with NQ. CES or post a lower low than Nasdaq, leaving the gap open, again unable. And again, the reason that, again, for those of you guys that may be new here, one of the reasons that's significant is the fact that we're unable to even trade down through that 50%. So because the algorithm that delivers price is indicating it's unable to even get through 50%, it's exceedingly bullish. So it's signaling, again, it's broadcasting the market participants that are in the know, this thing is going higher, look north. And again, you see how the algorithm reprices as a result. All right, 4-hour chart. Let's clean this up a bit. You can see ES has taken low, low, lower, low, and then we have relatively equal highs here. So I want to see S&P expand up into that, and that may be a setup that's even presented on Monday. So ahead, usually I look ahead to the week and give you guys the economic calendar towards the beginning. Actually forgot, so good reminder. For the economic calendar this week, we have a holiday on a Wednesday. So we'll share how we're tackling that, how we're looking to take on the week in our free newsletter, which you can sign up for through our website. And then with regard to my trading days, Monday, Tuesdays, there's high impact news, and Friday, there's high impact news. Yes, there's high impact news on other days, but those are primarily the 3 days that I'm going to be looking to trade, right? So I like to be very selective and focus on high probability trading days, making more with trading less. So my main focus is going to be those days. And the reason being, and the reason I promote teaching like that, is because a problem I notice with many traders is taking unnecessary losses that eat away at your wins. So by being more selective with your trades, that's going to fix that problem for you. So you're not having to take all those unnecessary losses that eat up all your wins, and then you're not able to have consistent profit. So again, being more selective, but more importantly, you have to know what you're waiting for, right? And again, that's understanding the economic calendar, price action, and how those factors all blend together. So looking at the equal highs on S&P, looking for higher prices. And again, the reason why I don't need to see Nasdaq take out these equal lows here is because you'll notice S&P already did. So there's the S&P divergence when, again, we're bullish looking for higher prices. So as an early draw in the week, we have the equal highs here. And I already taught how you guys can run ranges and standard deviations to the upside to, again, get targets and projections. And you can see negative 0.5, beautiful repricing to that level. And again, as long as we remain bullish, we'll look for these standard deviations to the upside. So that is the business for this week. I'll go ahead and get into your guys' questions now. And Matthew, another thing, these lives get boring. When it's boring, you're doing it right, brother. Adam, what prop firm would you recommend, Apex or TopStep, and why? So I would definitely recommend TopStep over Apex. So I'm not a financial advisor. I would obviously recommend everyone to do their own research into the company that suits your trading style and what it is you're looking to do. But from personal experience, TopStep is much more professional. And just, I'm sure you guys have heard about what's going on with the prop firm industry's problems with servers, all that. And those problems are much less likely in those more reputable firms from my perspective. But again, do your own research on that, because when problems do come up, I'm not going to be the one that recommended people to unreputable prop firms. TopStep, solid. You can trust what they do. Mr. Patak over there is running solid business. So you can have more confidence in TopStep. Armin, and we do have a link for referral code as well for TopStep, by the way. I wanted to throw that in there. Armin, do you always mark the wicks of the order block / breaker block? I see a lot of people mark the wicks and others only the body. Excellent question, Armin. So with order block theory, you use the wicks in certain instances, and there's certain instances where I'm using the body. What that depends on is the size of the wick. If there's a large wick on an order block, then I'm going to use the wick and the 50%, the high and low and the 50% of that wick as the sensitive algorithmic reference points. When there's a stubby wick and a large body, then I'm going to use the bodies of the candles and expect the sensitive reaction to occur at those levels. Christopher, agreed. The price is in discovery mode. Yes, sir. Graham, thanks, Dylan. Kindly do a check on gold. Absolutely. I got to see a few questions on gold there. Let's go and take a look at it. Man, I remember I was looking at gold last week. Man, I'm glad I don't trade it. So Monday, Tuesday, Wednesday, this is all the movement we saw in gold. So again, when you look at a market like gold, and then you can trade something like Nasdaq, to me, it's a no-brainer, right? Nasdaq, S&P, beautiful. And man, gold is just gold's a whole different beast. But let's take a look at gold. So what I was watching last week was this inefficiency, and I want to see how we trade there, right? So we traded up into it early in the week. That could have been a draw on liquidity, expecting the market to expand up into this inefficiency. And then I wanted to see how we trade there, right? Do we trade up into it and aggressively break down? Or do we trade up through it and continue bullish? Because we're seeing strength in dollar, I favored lower prices on gold as a result. However, we'll have to see how we trade here. From my analysis last week, we haven't done anything into this week. All we did was trade up into this gap and close there. So for gold traders going forward, you're going to want to watch this fair value gap in the 50% level, and that's going to be highly sensitive, and you can see how that level is being worked. So as long as you remain below that and this breaker, this down close here, this range, as long as you remain below that, I'm looking for lower prices. If we get above the breaker on a closing basis, then I'm looking for higher prices. So bias is straightforward on gold, just going to have to watch the order flow inside this key level. And as long as we remain sideways, it remains low probability in my opinion. But we do have equal lows here and here. So again, the reason why I'm favoring this PD array even working is because my draw is down here. And again, that's the key. That's the secret everyone's looking for. It doesn't really matter what entry model you use. It's all about knowing where the market's going. And then once that occurs, all the entries work wonderfully. So that's what I'm looking at going forward on gold. And it's really the same thing as last week. We haven't really moved. Matthew, also I'm 50-50 and have no clarity for crude oil. Do you feel the same? Yeah, let's take a look at crude. All right. So as many of you guys know, longer term, I am bullish crude. I do suspect we're going to see crude not just higher, but much higher in the future. But for right now, again, we had to trade the underlying order flow we've been seeing, which has been lower prices as of recent. So we traded into a discount of this range from this low to this high. And I wanted to see how we traded in a discount, right? Some of the fundamentals have been bullish on gold as it relates to the wartime events, things going on around the world, and also the production cuts that we've seen. But again, keep in mind how fundamentals work. If interbank smart money traders are going to be buying this market, they're going to wait for it to trade into a discount first. So what I wanted to observe was how we traded below 50%, and we've seen a repricing to the upside. If we drop down into the daily chart, what I wanted to watch last week, because again, the recent order flow has been bearish and I want to stay in line with that. So what I was watching last week was the breaker, which I mean, we could really say is all these candles. So I would not use the breaker in this instance. I would use the bearish order block. So looking at the bearish order block here, or you could use the breaker, they would both complete the method. I'm watching this order block here, this last up close candle, and I'm seeing how we trade here. You see 50% mean threshold. We haven't been able to get above that. So as long as we remain below that, I'm going to stick with the underlying order flow we've been seeing and continue looking for lower prices. However, as of right now, it's pretty uncertain. We're unable to get above the order block, but it's also not showing a willingness to break down and displace either. So whenever there's an instance like that, what I wait for is displacement on the daily chart. Or you can even refine it down to the hourly if you know what you're doing. So what I recommend is wait for the daily chart to show itself and make itself one-sided. And then you can even wait for displacement on the hourly chart. But as long as we remain in a sideways range like this, it makes it difficult. So again, just wait for us to displace on that hourly chart and leave that range. And then that'll give you the clarity that you're looking for longer term, again, based off how we trade inside this higher time frame key level. Moen, what kind of risk management model do you recommend for prop challenge phase? That's an excellent question. There's a lot of factors that go into that, right? Is it a Forex prop account? Is it a futures prop account? What size is it? What's your experience level? There's a lot of things that go into that. So I wouldn't be able to answer that directly, but in my community, I do teach people how to adapt their risk management to their experience, to what makes sense for that account they're trading to not over leverage, but also obviously not be trading too small a size. So that would all be part of a proper training, should show you how to determine all those things they're mowing. So would want to help you out. I would just need more information to be able to give you more specifics. Great question though. Definitely focus on that risk management in your accounts. That's what's going to keep you in the game and keep you getting those consistent payouts. Carl, would you recommend Apex still or not? I'm with them, but they had a few issues this week. Good question, Carl. So here's what I think about prop firms, right? The way I share, in my opinion, is the best way to go at them, is these prop firms are a phenomenal opportunity to harvest income and make money from, right? You guys see, I share. I haven't been sharing as much. I think I usually just share this to the private community, but getting consistent payouts monthly is something that I do, and with several companies. So I say that to say, while I wouldn't have all my eggs in one basket, because I do trade live accounts as well, you want to save up for your live account. The end goal should always be to have enough to trade your own capital. But while the opportunity is available to harvest income from these companies, I would say, why not take advantage of it? It's a phenomenal opportunity. The risk is low on the trader side, and the upside is unlimited, again, if you have the skill set. So the key is to get the skill set, and then absolutely, I would take advantage of every prop firm you could. That's within your capabilities. So that's my take on prop firms. Milk them while you can, all of them. And if they give you issues, I mean, the relative investment that you're putting into what you can make is phenomenal. So if you're comfortable with that risk, then I would recommend leverage them all you can. That's what I do. That's what my team does, and it's a skill set that pays well. Jair, end of day trailing drawdown at Top Step is far to be preferred against instant trailing drawdown at anyone else. Absolutely, absolutely, yeah. And it also goes into the price difference, right? You know, if you're paying $18 for a challenge, there's probably a reason why it's so cheap, right? So using a little bit of common sense goes a long way as well. You know, if you're paying a little bit for something, there's probably a reason for that. But again, it's a great opportunity. I know many that have made fortunes through Apex, many in our community that take payouts from Apex, right? So there's nothing wrong with it. Again, it's just using the company that's more aligned with what it is you're doing in your trading. Dane, hello Dylan, great job. Thank you very much. Why do you expect a retracement on ES for this week, last weekly range? As far as S&P, I'm looking for higher prices. We've already, as I shared on the daily chart, we already traded down to the inefficiency and we found support at 50%. So if we're going to remain bullish, I want to see us remain above this inefficiency here. And it's already traded down into it and showed a willingness to trade higher from that key level. So that's what I'm looking at going forward on S&P. Jair, sinking of 2 ships in the Red Sea plus more fighting in Lebanon may push up oil more now. Yeah, exactly. Everything that's going on around the world will definitely propel oil higher. Got to be careful with what I say here on oil, but what I say here about oil and how that relates to everything, because you guys know how YouTube is. But I know many of you guys are smart enough to read between the lines, do your own research, and know what it is that's going on. Jay, are we just going to keep climbing? LOL, pretty bullish. Tech has been strong. Yeah, absolutely, Jay. Until the high's priced in, we're looking for higher prices, brother. No doubt. Tech has been strong. Daniel, can you touch on how to make money without trading news? Without trading news, example given, because it seems like news drives price to desirable levels and I can't take part. So I mean, you can trade news, right? It's just not getting in before 3 specific news drivers: CPI, FOMC, non-farm payroll. So this is what I recommend. Again, those in my opinion are just murder. So getting in ahead of that isn't a good idea for someone that's responsibly managing their money. But what I would recommend is trade all the other ones outside of that, right? There's high impact news several other days on the calendar, either high impact or medium impact news several other days on the calendar as well. And there's opportunity on all those days that if you have a proper model, a trading plan, money management, all those things, then you should have no problem navigating the news on all those other days. Moen, I have passed 2 prop accounts, but I lost them in real phase, and I think that challenge phase and real phase should have different risk management. Yeah, exactly, Moen. So again, it's all tailored to, are you in an evaluation? Are you in your funded account? And again, tight risk management is always number one. Jared, Top Step now allows 5 XFAs in the trade copier is all I need. Yeah, absolutely. You can do some damage with 5 accounts, no doubt. I was showing my community this week the damage you can do with just 2 accounts and just trading a couple days a week. Again, like I was sharing earlier, being very selective with your setups raises your strike rate, reduces your stress, and you make more money long term. Exactly what every trader wants. At Top Step, we can trade news. Yes, sir. Matthew Dillon, can you touch on Ethereum daily chart? Not sure why we violated the intermediate term low. Yeah. All right, let me go and take a look at Ethereum. And that'll probably be the last question I'll take here. Let's go up to a monthly. All right, monthly chart for Ethereum remains bullish, down closed candle here. Again, one thing to be careful with, one of the reasons why we haven't been seeing a lot of ease of rallying on the crypto market is because dollar is also bullish as well. So again, that's just going to add a little more difficulty for risk assets to rally at the same time. Looking at Bitcoin though, Bitcoin has taken out this external high and Nasdaq has been unable to. So that's something to monitor going forward. If we're going to remain bullish, we already dropped down into the gap. And now we have this down closed candle. We should stay above that if we're going to remain bullish on Ethereum. Weekly chart, we have this inefficiency. And we traded down into 50%. So again, as long as you remain above 50% of this gap, again, that's going to be textbook gap theory. So as long as you remain above it, we're looking for higher prices. We have relatively equal highs here. But again, man, markets are just crazy town. We got all markets going everywhere. Nothing's doing what it's supposed to be doing. So again, you just have to be extra surgical in these types of conditions. So equal highs remains the draw, again, as long as the order flow remains bullish. On the daily chart, markets traded down into a short-term discount. If we see, from low to low, we've traded down into equilibrium, stop run. So not only did we trade down to equilibrium, but we took stops at equilibrium. As long as we remain bullish, this should be a bullish order block. And we would want to see expansion to the upside and remain above this down closed candle if we're going to remain bullish on Ethereum. So all this was here was reaching for a short-term discount if we're going to remain bullish into the highs. So that's the business on Ethereum. Amy, what are your thoughts on Dow? Man, I have a lot of thoughts on Dow. None of them are good though. So looking at Dow, let's look at the daily chart here for Dow, right? So very disconnected from all the other indexes, which is very interesting, right? It looks almost like an entirely different market, right? So extremely decoupled markets on the weekly and daily. So we see Nasdaq has been trading higher, again, in line with what we've been looking for. S&P as well, but Dow's actually been weak. So Dow is the decoupled market. In my opinion, Dow's 50-50. It has equal lows here and equal highs. Based off the underlying order flow and what we're seeing, I would suggest it's going to want to reach into the lows. But in my opinion, it's just very low probability because of the disconnect in markets that should be moving together. And when they're not moving together, what that's indicating to smart money is that it's just lower probability because they're moving decoupled. Can it still be traded? Absolutely. Again, you just have to be conscious of the fact that it's a lower probability market condition. And that's why I just don't prefer Dow as much, because it is only 30 companies. So it's a lot easier for them to manipulate Dow over S&P and Nasdaq. And not to say it's not all manipulated, but there's something behind how many stocks are in each index that plays a role in the price delivery. Latrice, what happens if we can't trade the New York session? Is London session recommended? Absolutely. There's plenty of opportunity in the London session. Absolutely. Adam, do you think cold showers will improve my psychology in trading? You know, the biggest thing to improve your psychology in trading is to improve your psychology outside of trading, right? So getting disciplined, going to the gym, with your eating. If you say something, do it, because you respecting yourself, respecting your word will allow you to become a more disciplined, confident person. So when you sit down at the desk, you're going to bring those same habits into your trading. And that's how you improve your psychology as a trader, is working on everything outside the trading. And then when you come into your trading, it's going to give you the stone cold mentality you need to be disciplined and make sure business is handled. Matthew, but the June 11:30 took out stops within the daily breaker, tab discount. I don't know. So it's, if you keep in mind, Matthew, go think about that month one content, which is, okay, it trades down to a key level, right? Which is the breaker and equilibrium, which is what you were looking for. But again, what happens at that key level before we see the change in state of delivery? It has to run stops first. So it trades down to the key level. We wait for the stop run. Then that's when the real move happens. So again, we have to wait for retail to get stopped out at the key level we're looking at. And then when we see that displacement to the upside, that's your trigger to get into smart money. Lots of abroad investors in Dow with high USD. That's, Nia, that's great advice. It's what I do. It's what I do. Glad it's helpful. Appreciate you joining us. Jerry, lately I found London session better for short on USA equities and New York better for longs. And Jerry, there's something behind that. There's a reason why London's better for shorts and New York's better for longs when the market's bullish, because you have to think about time and price and what the daily range is doing within the context of time, which is, there's usually, if you look at the daily chart, which has been bullish, the wicks on the daily charts are happening during the London session. So if the wicks are created in the London session, what does that mean? London's creating that low of the day. And then we're seeing that expansion distribution in New York. And that's just straightforward time and price theory. All right, guys. Hope this one was insightful. Enjoyed hanging out with you guys, but I'm going to go ahead and get going here on my Sunday. Appreciate you guys tuning in. As always, newsletter will be out here at 8 p.m. sharp. And we'll be back at it for this week. If there's any updates, anything we're looking at, we'll be sure to let you guys know in our free Telegram. Until next time, take care. Have a great weekend. See you, everyone.